Welcome back to Tax Time, sponsored by Straight Talk Wireless. I'm Rochelle Akutho. Now, we're fast approaching that IRS deadline, tax deadline, and many crypto investors are struggling to navigate the rules for digital currency holders. Well, here to break it all down with us is CoinTracker's head of tax strategy, Shehan Chandrasekera. So, first of all, Shehan, welcome to the show. Walk us through some of these new IRS crypto reporting rules and the changes that filers should be aware of.
Sure. Great to be here. Thanks for having me. So let me kind of give you a quick overview of what kind of guidance IRS has issued so far. So IRS first came into the picture in 2014, and they issued IRS guidance saying that cryptocurrency should be treated as property. So after 2014, they issued another set of guidance in 2019 in the form of FAQs. So since 2019, IRS hasn't issued any new guidance. In 2022 tax forms, we continue to see that infamous crypto tax questions on the front and center of the Form 1040. And that's a question that every taxpayer needs to answer going forward. So to answer your question, nothing new, but the guidance is there for you to file the actual tax forms if you deal with crypto.
There's a number of misconceptions here around crypto. And, we're sort of at that phase still where a lot of crypto investors are just trying to get to know what this all means come tax filing season. But the thinking often is that if you don't necessarily use crypto, trade crypto back to US dollars, you're not necessarily, you don't necessarily need to file. I mean, can you walk us through the specific events that crypto investors need to be aware of where taxes are owed?
Sure. So remember these 5 situations. And if you went through these 5 situations during 2021, you could have a taxable filing. So number 1, cashing out. Pretty self-explanatory. You had a Bitcoin that appreciated in value. You cash it out. You got to pay taxes. Number 2 is when you convert one coin to another. That also triggers a taxable event, even though you're not realizing any actual cash. And this is where a lot of people get it wrong. As a matter of fact, we recently conducted the survey in CoinTracker. We found out that 58% of the respondents didn't know that they had to pay taxes when you convert one coin to another, which is a very common transaction in this space. Number 3 is when you spend your cryptocurrency, you buy a cup of coffee or like a Tesla or something like that, that triggers taxes. Number 4 is when you earn cryptocurrency. You can earn cryptocurrencies as a method of employment, like wages, staking income, interest income, those things are taxable. And finally, if you go to airdrops or hard forks, these are somewhat technical things that are unique to the crypto space. So airdrop is a situation where you have a certain type of wallet or a coin, and the protocol kind of gives you free coins. That triggers a taxable event. So those are the 5 situations. If you went through those 5 situations, you could have a taxable filing requirement.
And as we know, of course, crypto can be volatile. We've seen this year especially. How should filers manage things like capital losses and carryovers if they have lost?
Yeah, so as you guys know, the market goes through ups and downs all the time. We are pretty used to that nowadays. One thing to note is that whenever you have a loss, you should also file taxes on that situation, because you can claim up to $3,000 worth of capital loss in any given year. And if you have more than $3,000 worth of capital losses in any given year, you can carry those losses forward into future years. And in the future years, when you have capital gains, you can use those capital losses to offset those gains. So again, don't think that you have to file a tax return to pay taxes. You can also file a tax return to report your losses and potentially increase your refund, and also carry forward that losses into future years.
What about tax breaks? I'd imagine that's something that a lot of investors are curious about. What should they know on that front?
Great question. So the tax planning idea. So again, going back to what I was describing earlier, if you have any coins or NFTs that are below their cost basis. In other words, let's say you paid like $50,000 for Bitcoin, but now it's trading at $30,000, for example. What you can do is you can sell that coin and harvest that $20,000 worth of losses and get back into the same coin within a reasonable period of time. So when you do this, we call this tax loss harvesting. First, it's going to benefit you when it comes to taxes, because it's going to reduce your taxable income. and you can claim certain amount of those losses. And if you have amount of losses in excess of 3,000, that's going to go into future years. So tax loss harvesting is something that you should consider doing every month, every other week, depending on the frequency that you have. Another way to kind of save on your taxes is if you really want to sell coins, make sure you sell the coins that you have held for more than 12 months. When you do that, you're going to get taxed on the more preferable long-term capital gain taxes versus you selling a coin after holding it for less than 12 months. So make sure you tax those harvest. And second, if you really have to sell something, make sure you sell the coins that you have held for more than 12 months. And that's going to lead you to a less tax rate.
And as we've seen, different countries have different rules on crypto. So how should people navigate some of these crypto holdings that they have perhaps overseas that may have different tax rules?
Yeah, great question. I get this question all the time. The reality is that the US has this thing called a worldwide tax system. So if I have my crypto holdings in some exchange in, let's say, in Europe, I still have to pay taxes on those holdings if I have any disposition event under the US tax rules because I'm subject to US tax rules. So if you have any crypto exchanges in other countries, you don't necessarily have to follow those overseas tax rules. If you're a US resident or a citizen, you still have to follow US tax rules for those coins held in overseas exchanges.
And finally, you've already kind of walked us through the provisions that taxpayers should be aware of, but I'm just curious what kind of calls you're getting. What's the number one question you're getting from those who are having to file on their crypto holdings for the first time this year?
Yeah, I think the number one call that I'm getting is that, hey, Shehan, like, how do I figure out my capital gains and capital losses? Because if you really think about it, if you're like a stock trader, at the end of the year, you get this nice Form 1099 from the brokerage, and your job is just put that numbers into a tax return and you're done. But in the crypto space, it doesn't happen. It becomes your responsibility to look at all the wallets and exchanges that you use, keep good records of all the coins and NFTs that you created, and figure out your taxable gains or losses by applying the latest IRS rules. And a lot of people find this virtually impossible to do, and they get afraid, and then they talk to us asking, hey, how do we go about it? I want to file my taxes, but I don't even know where to get my information. And that's where we help through CoinTracker.
And to that point then, for people who are perhaps either getting paid in crypto partially or fully, what is it that they need to present? And is that something that they would have to sort of go to the platform and get, or is this something some of these crypto platforms would naturally provide for them?
Yeah, so we see some of the athletes getting paid in crypto as well. If the employer were to do this correctly, your crypto wages should be included on your Form W-2. So as a taxpayer, I don't have anything new to do other than just inputting my W-2 into a tax software or just giving it to the CPA. But there are certain situations where your employer pays you in crypto directly, but they don't report that to you in any form of tax form like a W-2. In that case, you had to keep track of each coin that you receive, at what time you received it, and the market value each time you receive those coins, because every day, every second has a different value. So you need like these detailed records to kind of figure out your income to be reported on the tax form. And again, it's a very difficult task to do. But if you're getting paid in crypto, those are the records that you should keep on handy to file your taxes.